You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications.
All right, everybody. That music means we are back once again. It is Thursday. It is 1:30 p.m. Central. It is 2:30 p.m. Eastern. You know what's going on in the world of futures options? Well, let's find out together, shall we? Because it is time once again for TWIFO. This Week in Futures Options, a program where the name pretty much says it all. We're going to break down the week that was and indeed still is from a futures options, trades, trend analysis, CVOL, all sorts of fun perspectives here on the show. My name, of course, Mark Longo from the THEOptionsinsider.com, as well as from the network upon which so many of you are mainlining these days. Remember, if you want to join us live, this show, anything else we do throughout the week, you want to join us for a great pro Q&A session, just as our buddy, the options guy, Mr. Brian Overby, tackling all your questions in there yesterday, as well as, of course, Options Oddities every Friday. Great giveaways, some fun pro exclusives, like maybe we were able to upload that audio from that awesome panel we did at the STAC conference earlier, I should say towards the end of last month. Great session getting into all things zero day and some crypto derivatives and anything else. You want to check that out? Only one place to go, theoptionsinsider.com/pro is the place to go to learn more. As we learn who's joining us in the old hot seat this week, I'm pleased to welcome back our old friend, Mr. Scott Bauer from Prosper Trading Academy. Scott, welcome back to TWIFO, sir.
Mark, always a pleasure to be here.
All right, then let's get rolling right on into a little bit of the old movers and shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers Report, the portion of the show where we break down all the action, lighting it up to the light side and to the dark side over there at CME Group this week. Looks like it's a pretty even split this week. This is probably the most even week we've seen in a little while out there, roughly 50-50 to the light side and to the dark side, even if some of the larger percentage movers are coming in on the upside. But it's a close race, not that far away on the dark side as well. So, Mr. Scott, what I'm saying is pretty much either way you choose, you can't go wrong. Where should we start our journey this week, to the light side or to the dark side?
No, we got to side. You got to get mood.
So you're kind of breaking up there a little bit. Which way did you choose, sir?
We got to go light side. Got to get everybody in a good mood.
There we go. Light side. All right. To the light side we go, listeners. Let's start here. Number 5, as we are wont to do, even though they gave me a top 7 this week for some reason. It's kind of fun. If you want to know what number 7 is, listeners, it's the E-mini mid-cap S&P 400 up 2.01%, followed by our old friend number 6, the Russell 2000, 3.27% to the upside. But we're not here to talk top 7. We're here to talk top 5. Listen, number 5, it's the Nikkei up 3.54%. Obviously, some interesting news coming out of Japan recently that just got supplanted by Germany as one of the top economies out there. So intriguing things. And the Nikkei still rallying this week. Number 4, we go from international indices to the ags, in particular livestock. Lean hogs up nearly 6.5% this week, followed by number 3. From the hogs, we go to the metals. It's our old friend palladium moving and shaking again. This might have to add them to our frequent offenders list. It's a shame because they don't do any options, but then again, neither did lumber, and they were on our list every week, so maybe we need to amend it from lumber to palladium. Either way, palladium, number 3, up 9.18%. By the way, it was number 1 in the other direction last week, off 8.25%. Lean hogs were also number 4 to the dark side last week, off 4.3%. So rock'em sock'em couple of weeks for both of those. Number 2, we go from the metals to energy. It is RBOB, up 9.79%. It was number 2 in the same direction last week, up 5.33%. And then our number 1 light side mover, you could probably guess it, given what's been going on out there over this past week, and also the fact that it has been one of our frequent offenders for a while. It kind of fell off, and then, of course, this whole ETF approval thing put it back on our radar. Hint, hint, yes, I'm talking about Bitcoin, up nearly 15% this week, 14.94%. It was number 3 to the same direction last week, up about 5.14%. Of course, it crossed that magical, mythical 50K level again this week, listeners. So a lot of eyeballs back on crypto right now. Now to the dark side we go, listeners. Number 5 to the dark side, going back to the livestock. So a little bit of a bifurcated week on the livestock front. Lean hogs gaining and live cattle losing, coming in number 5 off 1.85%. Followed by number 4, we go off to the wheat, in particular KC wheat, off 2.79%. And then number 3, soybean oil, off 3.83%. That was number 4 in the other direction last week, up about 4.82%. Number 2, from the beans, we go back to energy. It's heating oil, off 4.24%. This was our number 1 light side mover last week, up 5.65%. So heating oil giving back almost everything that it gained last week. And then from heating oil, we go back to our number 1 frequent offender. It is our old friend NatGas, off another 12.68%. Number 2 in the same direction last week, off 6%. So closing in on 20% to the dark side over the last couple of weeks. So a lot going on out there. Scott, since the last time you joined us in the old CME hot seat, we've made some additions to the movers and shakers report, including breaking things down, not just from a underlying movement perspective, but also from a vol perspective. I know you and I have talked on maybe some other programs like Pro Q&A about CVOL, but let's break it down here for our TWIFO listeners as well. Are you a fan of these reports? And if so, how do you implement them in your trading?
I am a huge fan of CVOL. In fact, I've written a couple articles for CME, trying to break CVOL down, just for the basic retail user. You can trade volatility in any space you want, whether it's futures, whether it is equities, whatever it is. And what CVOL does is it breaks down the curve, meaning it tells you not just what at the money options, what the implied volatility is. It really, in a very, very easy manner, tells you what the skew is. Is the skew to the downside puts? Is the skew to the upside calls? And as a volatility trader and understanding volatility, this is a real big help for me. And I think anybody that, wants to take a deeper look into trading options and not just look so much at direction, whether you're bullish or bearish, a move in whatever it might be. But if you want to look at actually enhancing that by trading the volatility, CVOL breaks it down.
All right, we're going to break it down right now, listeners. We're going to mix it up since we started light side with the underlying. Let's go a little bit of dark side on the old CVOL today. These are, unfortunately, some reports you can't get your hands on the TWIFO report. These you only can get access to if you're one of the premium members over there at Bantix, and you can look at all the different aggregate CVOL tools that they have. Pretty cool stuff. Again, Bantix.com, Bantix.com is the place to go to kick the tires and light the fires. Tell Nick we sent you. He'll be very excited to talk to you over there. Let's go to the dark side first. And our number 5 dark side mover is just 3 months SOFR, listeners. Again, these are the aggregate CVOL indexes like Scott was just talking about. So they're using that methodology, incorporating the skew with some at the money to come up with this CVOL number. You can, of course, dig into the page for yourself to see a little bit more analytics about what these numbers actually mean. But we're looking at about a little bit over 99. That's off about a little over 2, about 2.1 points on the week. Then they have, of course, the aggregate CVOL indices, which take the entire complex and make one aggregate CVOL number. In this case, we're going out to the treasuries for number 4. That's off 2.65 points. That's at about 128 and about a quarter right now. It looks like it's all pretty much treasuries on the dark side vol this week, listeners. Number 3, we're going off to the 10-year. I know a spot on the curve that a lot of you like to hang out in the rates complex. The 10-year CVOL, 123, almost just a tick under 124, listeners. That puts it off about 2.88 points on the week. Number 4, we're going to... I should say number 2, going the wrong direction. Number 2, we're going to the 5-year, so getting a little bit closer on the curve. That's at about a 139.17. That's off about 3.19 points. And our number 1 dark side mover this week, again, keeping it all in the rates this week, it's the 30-year at a 112 and about a quarter, off 3.8 points on the week. So a lot of dark side on the rates complex this week. Where are we finding the light side on the ball? Well, surprisingly enough, number 5 to the light side is actually also in the rates. It's also the 1-year portion of the 3-month SOFR. Again, SOFR has got a lot of expiries, listeners. It's kind of a beast to come to grips with, we know, for a lot of you out there. But that's at about 153.20 right now, up about 1.2 points. Number 4, we're going off to the ags again. It's corn. The corn CVOL is at about 20.2, up about 1.3 points on the week. Then number 3, we're going right back to the rates. This time, really close to the fire is the 2-year. That's at about a 153.70 right now, up about 1.52 points on the week. Number 2, it's the energy aggregate CVOL at 54 and about a quarter, up a little over 2, almost 2.1 points on the week. And number 1, frequent offender yet again, even in the CVOL, listener, you can't escape it. It is, we said it before, we'll say it again on the show, NatGas is undeniable, inescapable. Pick your adjective. It probably applies here. NatGas, number 1 light side CVOL mover this week, 74 and about a half, up about 3.5 points on the week. So, Scott, NatGas was our number 1 dark side mover on the movers and shakers and our number 1 light side mover on the CVOL vol. So I think we have to start in energy first.
It's time to tap into the deep options well of black gold, Texas tea, NatGas, and more. It's time to talk energy.
All right, listeners, to the wild world of energy we go. Go to that cmegroup.com/TWIFO, into that drop down, go into the asset class. You're going to select energy. That's 3 slots down from the top. It is an alpha order list after all. Then from there in the product family, you're going to go 3 more down to NatGas. And that's where you're going to be hanging out today. NatGas, man, taking a drubbing over the last couple of weeks. The complete polar opposite of a lot of the rest of the market right now. At about a 158 when we're coming into the start of the show. We were just talking about north of 2 handles not too long ago. We were talking about people loading up on 3, 3/4, and 3/2 calls expiring in a week or two. 1/2 close to right now, listeners. Off about 26 cents this week, or a little over 14%. Just since Monday. Of course, you go back to the end of our show last week, we're off about 12.7% or so. So just another topsy-turvy week. Also, another banger week. I'm hard-pressed to think of another week I've seen this much volume going up in NatGas, maybe outside of some aberrant weeks with the early days of the Ukraine invasion there. But about 1.63 million contracts on the tape. Scott, this has been a refrain we've been talking about for a while here on NatGas, or NatGas, on TWIFO. I could probably call it NatGas. We talk about it a lot. But this is a refrain we've mentioned here for a while here on TWIFO. Just this notion of NatGas seems like it's moving into a new paradigm, at least from a volume perspective. Is this something that you're watching, and is this explosion of volume, is it starting to capture the attention of your clients over there at Prosper, even as NatGas continues to erode, Scott?
There's no question about it. You know, I've been doing this for 30 plus years, and one of the nicknames for NatGas for as long as I can ever remember is the Widowmaker. And it is certainly playing out right now. To see what is going on with NatGas, boy, you almost think that, boy, can this thing go negative? Like what we saw with crude at the beginning of the pandemic. It's not going to, but boy, what an ugly chart. And at the same time, we are seeing that vol, as you noted on CVOL, really tick up. So anybody that wants to go, to the CME website, you can get this live data here. You can get this data just at the click of a button. In terms of the option volume, it is off the charts. There is huge open interest for March expiration at the $2, $2.25, 2.5 strike calls, $2 puts, 1.5 strike puts, and today's volume, massive volume today in the March $1.90 calls and the April $2 calls. So, people out there may be thinking enough's enough, although, you could be thinking that for the last, 6 months, 9 months, and boy, taking it on the chin.
Yeah, this is just becoming more of an impressive beast each week. You're right. Maybe the Widowmaker has returned. It's it's mind blowing every week. The paper we're seeing out here. You mentioned a lot of the paper you're seeing out here. What are the folks at Prosper up to? Are they contacting you and saying, "Hey, we want to get upside here. We want to sling some downside"? What are they up to out there?
Most that are reaching out to me, and we trade mostly on the equity and some future options also, but most are saying, all right, is enough? Do we buy these $2 calls, 2.5? How long do we go out? And can this thing actually go lower? So I've seen the predominant interest being on the call side, not on the put side.
Yeah, it has been fascinating to watch. The other question we're getting a lot, Scott, is just given all this, 1.63 million contracts. There's clearly a demand to trade this thing. Right now we have expirations going out 8 days, 11 days, and then 39 days. So a lot of people are asking, hey, we want more 0-day contracts. We want to expand beyond the equities. What other complexes are suited? And a lot of people are asking us if NatGas should be the next one that is added to that list. So I will put that question to you, Scott. Do you think we need more expirations, maybe even, dare I say it, some 0-day NatGas, sir?
I think the CME is going to be pretty reticent to go the 0 DTE route. I could absolutely see them bringing in more daily expirations or, the Monday, Wednesday, Friday contracts, Tuesday, Thursdays. They've done that in other asset classes as well. I think that would be a first step. But in terms of 0 DTEs, I don't see that happening anytime soon.
Is it too explosive, pun intended? You see what I did there, Scott?
Well, we see that obviously on the equity side with the S&P options, and it can move the markets. It certainly can move the markets. I just don't think it's at the top of the radar for CME.
Well, let's see what is on the radar for you folks out here slinging yourselves some NatGas. And man, that's a 1.6 million contract. That's a lot of paper, listeners. Spoiler alert, we're not going to hit all of it. But right now, it is looking like you folks are lining up at a little bit longer dated contract. It is the April contract going out in about 39 days. That future's hanging out at almost a 165. So obviously a little bit higher than that front future, hanging out about a 158. But intriguing stuff, 23.3%. of this 1.63 million contracts going up in that contract that expires in about 39 days. So we're going to hang out there. What's the vol there? Decently frothy at about a 67 and a third, up 11 and 2/3 points on the week. Of course, you get a little bit more near dated to get into the 8-day to go contract. You're looking at about an 80 and a quarter vol there. So again, take that vol with a bit of a grain of salt, but I know a lot of you like to play in the nearer dated stuff. So I'd be remiss if I didn't at least mention it. Going out again about 40 days, they're looking at the skew right now. The puts are leading the dance, which, again, is pretty much what you'd expect. A 9% bid to the puts right now. That's up from about 8.4% this time last week. So puts catching more of a bid, which, again, we're continuing to sell off, so not exactly surprising. You might think once we blow through that 2-strike and 1 3/4, maybe some people would be taking off those puts. So we'd see the skew come in a little bit, but that is not the case right now. And in terms of the calls, last week the calls 5.2% cheap. This week 4.1% cheap. So yet again, nobody wants to touch the calls, at least from a skew perspective. It's all about the puts, which is kind of the polar opposite of what Scott was saying his clients were looking at, which is interesting. Getting into the near dated stuff, which, by the way, I don't have a volume percentage, but the stuff expire for the 8 days to go, but for the stuff expiring in 11 days, 21% of the paper going there. So there is some near-dated paper going up. By the way, the vol 11 days to go, about a 79, up 17.5 points. And the skew out there, the puts 8.4% bid and the calls 2.2% offered. But the contract leading the dance this week, listeners, in terms of activity, it is the 1.5 puts expiring again in about almost 40 days. 56,000 of those bad boys going up this week. Again, that's more than some of the entire complexes with like Palladium and others. It's way more than that whole product just in those 1 puts. Again, the big day for this one on Monday, 20,000 pretty much exactly, 14,000 on Wednesday, 12,600 on Tuesday, pretty much opening all week long, and about 9,300 today against OI of about 30,000. So could be closing today, but if past is prologue, they're probably open on these 1/2 puts again today. And that makes sense. That's a very important psychological level, and we are threatening it yet again. So coming into today, I expected some action on these 1/2 puts, and that's pretty much what we're getting out here. But right behind it, listeners, if 1/2 puts not doing it for you, they're not far out enough, or they're not far out in terms of expiration enough for you, allow me to present the May 1.25 puts, lighting it up to the tune of 53,000 contracts as well. So a hot race for the number one most active contract out here this week, listeners. 1.25 puts doing size paper this week. The big day for those, actually almost exactly a tie between yesterday and today. 20,162 yesterday, mostly closing 20,142 today. So a whopping 20 contracts difference. Today's paper looks like it's opening because there's only 18,600 open coming into today. So maybe some folks opening here on the 1.25 put, 6,500 on Tuesday and 6,200 on Monday, slightly opening there. So back and forth opening to closing, but it seems like the bias is to closing. Now, you might be expecting it going the other way as we're threatening the 1/2. People closing on the 1/2 puts and opening on the 1/4 puts, maybe doing that roll down, rolling down and out some more. But doesn't seem like that's what we're seeing. We're seeing a lot of closing on the 1/4 puts, which also in and of itself is fascinating. If you're saying to yourself, well, what about upside? Scott was talking about upside. Anybody come into play in the upside this week, listeners? And the answer is yes. You got to go down to the number 3 spot to find it, though, listeners. We're looking at the 2 calls, again, expiring in about almost 40 days. So we're looking at the April contract again, doing 47,000 contracts this week. The big day for those, Tuesday. So we're all over the place on liquidity perspective here on NatGas. Is it Monday? Is it today? Is it Tuesday? Depends on the strike and the option you're looking at. 47,426 to be precise. Again, 26,000 of it's over half going up on Tuesday, mostly opening there. 11,000 and change today. That's against open interest of about 19,000. So anyone's guess what they're up to today. 6,700 on Wednesday and 3,400 on Monday. Opening there, also opening on the 2 quarters for 30,000, 2 halves for 16,000. So we're not seeing, doesn't look like any call roll down paper either. It's just kind of opening across the board. So Scott, it's a bit of a crazy palooza out here, opening on the 1/2 puts, which I kind of expected. A decent size closing on the longer term 1.25 puts, which I did not expect. And then also a boatload of opening to the upside on the 2s and the 2 quarters and even the 2 halves in April. Any of that surprise you, sir? Is that kind of what you expected?
No, I mean, you get into a $1, $2 stock asset class future like this, and that's, you see a ton of liquidity, and it's both ways at this point. We're seeing a ton of two-way paper. We're seeing the skew is not necessarily up or down. I mean, you look at this and say, how much lower can it go? Well, it can go another $1.50, right? So people are looking at that, and people are saying, boy, this chart is so ugly. Where is it going to stop?
It is quite ugly, but we've talked a lot in NatGas, Scott. I mean, it is inescapable. It is our number one dark side mover and our number one light side CVOL mover. That said, where do you want to head next, Scott? Do you want to hang out something else catching your eye in energy, or maybe there's another one of our movers and shakers that is catching your eye this week, Scott?
Well, we can obviously go right to Bitcoin because there is a lot going on.
All right. To the world of crypto we go, listeners.
It's time to explore the volatile world of Bitcoin, Ether, and more. It's time to talk about crypto.
All right, everybody, welcome to the topsy-turvy world of crypto. Listeners, you know where to find this. Go into that drop down. You're going to pop out of energy in the asset class, go up one slot to cryptocurrency, and then from there, it's a pick your poison. You're going to go big or you're going to go micro on the Bitcoin or the ETH. We'll start in Bitcoin, obviously, and then where we go from there is anyone's guess. But Scott, I'm curious for you. You've been in this game for a bit. You've been dealing with the clients out there for a bit. It seems like the interest across the board with all things crypto tends to rise and fall with the overall level of Bitcoin at the end of the day. Obviously, we've seen a strong resurgence in that over the past couple of months. So I'm going to guess anecdotally from that you've seen an uptick in interest from your clients over there at Prosper as well. Is that the case?
Oh my God. Not just in Bitcoin itself or the Bitcoin future, but also related stocks, a RUT, a Mara. Yes. The interest and the option volume in those related stocks the average daily volume is just increasing, exponentially.
We just talked about Mara earlier today on our option block show, making into our top 10 movers and shakers again out there, at least for a equity options volume perspective. Mara averaging somewhere around 600,000 contracts a day now, which is starting to threaten VIX numbers out there. So people are clearly playing in Mara out there right now. Are they playing also in the CME contracts, either the big mega Bitcoin contracts or the more micro contracts? The answer is kinda. Kinda and not so much. Looking at the micro first, which is I think where a lot of you would come to play. By the way, Bitcoin coming in to start the show, listeners, 52,300, up about 4,500 handles or 9.5%. Of course, that's just since Monday. If you go back to the end of our show last week, and we're talking about a banger up nearly 15%. The micro contracts still, for whatever reason, not resonating with the folks out there. Only about 1,200 contracts on the tape. Now, interestingly enough, if you go up to the big boys, the 5X, which again, Bitcoin hanging out at 50,000 again or north of that, that 5X multiplier starts to become a bit of a beast. But the big dog doing about 1,900 contracts, which again, you're not talking about a lot. You're obviously not talking about NatGas. For that product, though, it's actually decent and surprisingly more than the micro, which is kind of strange to me. And I guess if this is any indication, Scott, the number one most active contract, such as it is out here in the big 5X Bitcoin options, are the April 70,000 calls. Yes, 70,000 going up 200 times. Someone traded 100 of them yesterday and 100 of them today. No other spreads, no verticals, no rolls, no nothing. Just straight opening on the 70,000s and Aprils. And actually, I take it back. If you want to go all the way out to June, 210 of the June 70,000. So that takes it by a whopping 10 contracts. So maybe I'll have to look here. Maybe a bit of a calendar. That's a weird calendar. Yeah, they're closing on those. So maybe they're rolling back as well. Closing on the June 70,000s 210 times and opening this week on the April 70,000s. There you go. Scott, is that the world we're living in now? Are we talking about Bitcoin 70,000, sir?
Oh my God, there's no question about it. And the skew, we talked about skew earlier, and there is no crypto skew on CVOL. But if you look at the markets, the skew to the upside is just crazy. The out of the money calls trading at a substantial premium to the put side. So, the lifetime high or the all-time high in Bitcoin is 69,000, I think. Over the weekend, this past weekend, out there in crypto world, the 65,000, 70,000, and 75,000 contracts, call option contracts, went off the charts. Just massive buyers. And this is at a time when obviously we see this, the big breakout. But for people looking at a technical standpoint on Bitcoin here and that follow oversold or overbought positions, the RSI is extremely overbought right now. Does that really mean anything? A lot of people watch that, but that is the upside here is there is just a major skew on these upside calls.
Yeah, you're right. That's kind of been the way crypto traded for a long time. Obviously, the hodlers are out there just bidding up the calls to high heaven. The myriad crypto winters we've seen over the past couple of years kind of took that away a bit. We started to see a little bit of a bid to the puts, which is a bit of an aberration for crypto. Now we're back, you're right, into the strong, shall we say, optimistic. I'm looking at the CME numbers here. Obviously not the most liquid product, listeners, so take these with a bit of a grain of salt. But looking out to April, we were just talking about those 70,000s going up. Those calls are 10.2% bid to the at-the-money vol, which is already about a 60. So again, we're not talking about a lot of products at CME that have a 60 or higher vol. NatGas is the only other one that really leaps to mind. So you're talking NatGas and Bitcoin. It's kind of really about it. And of course, throw ETH into that mix as well. So you're talking a 10% premium on top of that. So for all of you out there who are looking at either overwriting or covered calls or maybe getting some verticals on, that little bit of juicy call skew is certainly a welcome addition for you folks. Is that what your clients are up to, Scott? Are they looking at just straight up buying calls? Are they doing verticals? Or are they doing a little bit of all of the above, whether it's in the Bitcoin options, whether it's in Mara? How are they going about it?
Mostly, and I love trading verticals. I love trading spreads, but the people that I'm talking to are really just kind of doing the YOLO job. You only live once, like we saw years ago, and just buying some of these out of the money contracts and maybe hoping to spread it off at a later time. But that's what they're doing now. And it's gotten almost to the point, Mark, that we saw a few years ago with the Wall Street bets and Reddits and the GMEs, and things have almost gotten to that point again.
Yeah, we've been hearing anecdotally about that. I was just talking again with our buddy, Mr. Henry Schwartz from, CVOL on the last show, and he's looking at some aggregate skew data, trying to compare it to 2021 and saying, are we starting to get into some of that, as you mentioned, kind of that YOLO skew territory again? And crypto, certainly no exception out here, listeners. Again, like I said, pretty sizable upside call skew. And of course, if you go out to names like Mara and Riot and some of the other ones you folks like to trade options on in your securities account, certainly BITO would fall into this category as well. You're seeing some pretty pronounced upside call skew out there. So yeah, if your clients are just YOLO and Scott, they're the ones bidding up these calls. It's their fault. I blame them. They're paying these 10% plus premiums in the CME contract. Not
by my advice, though.
Yeah, sometimes you can't walk them back from the ledge. They got to go off it themselves, Scott. Then they learn. But yeah, are we back in that YOLO territory, listeners? Is it back? Is it certainly maybe YOLO time for crypto? But is it back for the rest of us? We have the Widowmaker running rampant in NatGas, and we got YOLO craziness in crypto. That's the markets we're dealing with here this week. Scott, kind of a crazy show already. Widowmaker, NatGas, YOLO, crypto. Anything else catching your eye out there you want to talk about this week, sir?
So I'll be honest with you, it was number 6 on your list, but to me, it's so important. And I'm looking at the small caps and the Russell.
I had a feeling you might be going there. All right, listeners, to the equities we go.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, listeners, to the world of equities we go. Pop out of that crypto asset class, and you're going to go down 2 slots past energy to equity indices, and we're going to hang out in US Index E-mini in the product family. And where we're going after that, Scott just told you, we're going to the Russell 2000. If you've been listening to the show for a while, we used to do regular check-ins on all things Russell 2000, and we would have to work to really find 10 to 12,000 contracts to analyze, and that would be on a pretty active week. Now, fast forward to this week, almost 65,000 contracts on the tape. Now, to put that in perspective, that's a little more than one of those 1/2 puts we were talking about in NatGas, doing about 55,000 contracts. But still, for Russell 2000 options, this is a sea change. You're talking 3, 4, 5x what we used to talk about out there. So a very impressive volume. And of course, hanging out at 2068 right now, up nearly 50 handles on the week, or about almost 2.5%. A lot of that coming today on a hard pop today. Scott, I'm glad you brought up Russell 2000. This is a asset class, a product that we've been saying for a while now, certainly since Q4 of last year, has kind of been just off the chain. It's just doing its own thing. It doesn't care what the rest of the market is doing. The rest of the market could be selling off, and then small caps are popping 1%. Or like a day like today, S&P's up decently, and then small caps have the bit in their teeth up 2%. I mean, it's becoming a crazy product to watch. I'm glad to see you're keeping an eye on it too. What's been catching your eye out there in small caps this week?
Well, if you look at the charts for the Russell, I mean, this has respected over the last, I'm going to call it 6 months or so. It has respected technical levels, especially on the downside. The 50-day moving average, and we saw it hit earlier in the week again on the sell-off. That 50-day moving average has been a buying opportunity. I'm looking at the charts here right now, just over the last 6 months. I'm going to say almost a dozen times. Now, is that going to hold? I don't know. But when you look at the charts here, we're getting to levels now, Mark, around this 2060 to 2065 area. This is kind of a triple top here. And this is why you're seeing, to me, so many call buyers, because you get in a situation like this with momentum. I love looking at these triple tops for breakouts or a triple bottom. Same thing on the downside for breakouts. We're getting there right now. It would not be surprising to me if you start to see a major breakout here in the Russell. And I think that a lot of the option volume that we're seeing right now is kind of suggesting that.
Let's get out to the paper, listeners, and see exactly what we're seeing out there, listeners. And right now, you're talking equities, so of course you're going to see your 0-day contingent, and they are represented. But you know what? Of this almost 65,000 contracts, about 38% is going up in the contract that's expiring tomorrow. So there is that near-dated contingent. But the nice thing about small caps, I said, they kind of march to the beat of their own drummer. The actually most active contract is the one expiring on March 15th. So about 28, almost 29 days to go. It's the 2100 calls, listeners. So I said we're at about a 2068 right now. The 2100 calls, again, expiring in nearly 30 days. Going up about 3,500 times this week, 2,500 of that on Monday. It's just like a straight up opening of the 2,100s. Then we got some taking them off the rest of the week, 700 on Tuesday closing, a couple of hundred today. So the big print was really Monday, but does seem like talking about Scott's upside interest, 2,100s going up in 30 days. Could we be there we could be there tomorrow almost, the way small caps are moving, listeners. So, 2,100s. Did you have that on your bingo card, listeners, going up 3,500 times? That is leading the dance. Now let's get to the stuff everybody wants to talk about. It's the crazy 0-day fund. And again, it's not quite 0 day because these weren't listed today and are expiring today. But they have 1 day to go right now. So even though they were listed earlier. So we're talking about it in the very much 0-day part of its life cycle. And we're talking about the 1980 puts. So I said we're at about a 2068 right now. It's the 1980 puts going up about almost 1,600 times that are leading the dance out here in the, shall we say, near-dated club. Going up again, the big day actually today, 800 and change today, 550 on Monday, and about $1.50 on Wednesday. Not much going up on Tuesday. OI only 522, so today's paper clearly opening. Folks are opening on the 1980 puts with 1 day to go, listeners. Can we fall out of bed nearly 100 handles in the Russell 2000 by tomorrow? Or are they just trying to get some premium? And, past this prologue, a lot of people like to pick up the nickels in front of the steamroller out here in these contracts. So there could be some overriding going up there. But yeah, just that's not a strike I had on my bingo card. By the way, if you're wondering, how is the skew setting up? I'm not going to talk about 1 day skew because that's kind of a little bonkers. Instead, let's go a little bit farther. Let's go back to those calls expiring in March that have about almost 30 days to go. The skew out here is, surprisingly anemic for a contract that is, has these kind of moves we're seeing out here. The puts, normally in an equity like this, the puts are pretty firmly bid, but we are not seeing that. The puts were 4% bid last week. This week, 2.3% bid. So what does that tell you? It tells you nobody wants the puts right now in the small caps, which again, given today's banger move, not exactly surprising. And then Scott, going back to your point before about the Yolo call trading, normally we see the equities, the calls, I should say, in the equities offered to high heaven. The skew offered quite a bit. Last week, the calls were 1.1% cheap, Scott. This week, 0.4, so pretty much flat. So that's almost as close as you're going to get in some of these major indices to the calls actually catching a bid, Scott. So that does kind of reflect what you're talking about, some of this YOLO out of the money call love. And when's the last time you saw almost a flat call skew in a major equity, sir?
Oh, I can't even tell you. I mean, maybe just coming out of the pandemic, when the market was just off to the races. But yeah, in a major index, you don't see that. You definitely don't see that. So if that skew gets to flat or even close to flat, that's an anomaly.
Yeah. It might be all your YOLO friends bidding it all up for the rest of us to get nice, cheap verticals, Scott. It's very nice of them. But yeah, listeners, this is definitely a bit of an aberration. You don't see indices like these with the call wing as bid as it is. Now, it's still discounted to flat, but from a historical perspective, that's actually fairly juicy. So if we see, I'm looking here if I can see a little bit farther out, if I see any actual bids to the call wings. I don't, but they're all pretty close. 1% cheap, 0.4, 0.4. That's pretty much flat, which, again, in the historical annals of equity options, listeners, is effectively bid. I guess if you do go to the 0-day contracts that are expiring tomorrow, they are 0.4% rich. So there is actually a bit of a bid to the call wing. Again, that's expiring in 1 day, so take that with a bit of a grain of salt. But actually, if you go out 6 days too, those are 0.6% bid. And if you go out 8 days, they're 1% bid. So in the near-dated portion of the curve, folks are all about the calls, listeners. So that does get back to what we were saying on the last show, and now with Scott just now. This YOLO frenzy definitely carrying over into the small caps. And speaking of frenzies, listeners, let's see what you folks are all fired up about, because it is time for your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's Mixlr.com.
All right, everybody, let's see what you folks have on the brain. And Scott, we had a question of the week last week that's right up your alley. Not so much for the core focus of this show, which is futures options, but I think you'll appreciate it. Maybe you'll find it surprising because we asked our audience last week, earnings season going strong. We're seeing a lot of action, a lot of market movement out of big names like, your Amazons and your Metas that are just moving markets these days. So we asked you the question, how important is earnings season to your options trading at the end of the day? Very important, somewhat important, a little, I guess, or not at all. And Scott, somewhat important, took it with 46.7%, followed by 26.7%, number 2 for very important, and then 20% exactly for a little, I guess, and 6.7% for not at all. What are your thoughts on this? Does this surprise you, or does this kind of line up with what you see from your clients over there at Prosper?
I think in general for retail traders, it's somewhat important. For us here, earnings season is a great time to be trading, because that's where we get to trade volatility that gets out of whack, that we know is going to, revert back. So I think that our clients here, our students here, probably have a little bit different of a skew on that than the typical retail trader. They're going to tell you that earnings season, we're ready to load up and take positions.
You got to tell them to vote in our polls, and they could have skewed it in your favor, given the old very important taking at the hot seat. So there we go. Interesting stuff. Speaking of interesting stuff, listeners, our actual question of the week this week, which is raging right now, again, very much dovetailing into the equities, but has a bit of a, shall we say, TWIFO flair to it as well. At the beginning of the week, we were joking on one of our shows, hey, look, Tesla and Apple both trading at about the same level, $188. So, of course, we had to ask you folks about that. Gun to your heads. Which one would you rather buy right now, Tesla or Apple? But then we get the TWIFO flair because we added in a few others just for fun. We said, I'll forget those. I'll stick with crypto, which, given everything we were just talking about, could easily be a choice. Or Forget those two. I'm going to stick with more broad equity vol / VIX. Pick your poison. Scott, if you have a vote in this poll, which way you going? Are you going Apple, Tesla, crypto, or VIX? And then B, more importantly, which way you think our audience is going?
Well, it all depends on time frame. But for me, if this is, let's say, a month, I'm probably going with Apple. If it is for the rest of the year, I'm probably going with VIX. Now, I don't think your listeners are going to agree with me. I bet they're going crypto for the, if there's a short run, and maybe Apple for the long run.
Yeah, crypto was kind of running away with it early on. It since has moved. Now Apple is taking it, 37.7%. Kind of the wrong move right now. Apple taking a drubbing this week. It's down threatening 180 now since we posted this. And then Tesla number 2, Scott, 29.9%. Tesla roaring the other way back up to almost 200. So just in the near dated focus of this week, Scott, that's the wrong choice. But this poll, you're right, does depend on frame of reference. We didn't specify. We didn't want to get that specific for our audience. And then 20.8% going the vol route. And then, surprisingly, crypto falling off after having a strong early showing, only 11.7% for crypto. Where's all our crypto YOLO hodlers out there? You got to get in there. At Options is the place to go to make your voice heard. All right, everybody, that is going to do it for the TWIFO program this week. Also going to do it for us on the network today. Back again tomorrow, noon Central, 1 p.m. Eastern, to talk all things volatility. And spoiler alert, going to have a lot to talk about. Our friend there on the VIX Feb 17s had quite the interesting week. Did it work out? We'll touch on that and a whole bunch more. Who will our guest be? Got to tune in to Vol Views to find out. Of course, if you want to join us live, and of course, if you want to join us after the fact for our exclusive Options Oddities show, only one place to go, theoptionsinsider.com/pro. Glad to see so many new people and new names joining the pro. It's a fun group of people. Check it out, theoptionsinsider.com/pro. And Scott, if they want to check out what you have cooking over there in the land of Prosper, where should they go? What should they do?
Yes, you can find us all over social media or at our website, prospertrading.com. And we have lots of students, lots of clients that we, trade with during the day, explain the markets to them during the day. And, we're here 8:30 to 3 o'clock Central Time every single day.
He's a busy man. I can relate. Putting out a lot of content here on the network as well. But check him out over there at Prosper Trading Academy, listeners. And of course, you know where to go to check out all the data we're talking about on the show each week. CMEgroup.com/TWIFO, TWIFO, the place to go to kick the tires and light the fires. Few of you have been asking, hey, where do I get my hands on all that CVOL goodness? It is not part of the TWIFO report. Is a separate thing, listeners. Luckily for you, just type CME and CVOL, CVOL, into your browser, and it'll get you right there. It's another tool, another page that's embedded on their site, kind of like the FedWatch. You can pull it up, and you can see all the numbers that I'm talking about there on the show. You can go by complex, you can go by aggregate, you can go by individual product, however you like, whatever floats your boat in the land of CVOL. So I encourage you, if you're intrigued by all these vol things, check it out. And again, we'll see you back here tomorrow for Volatility Views and then for Options Oddities for all of our pro folks. No shows on Monday, obviously off for the President's Day weekend, so no crypto, no option blocks. So you folks have a great holiday weekend. Then we're back again on Tuesday with the Pro Q&A all the way through to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.